We are just over halfway through 2025, so here are all of the dividend stocks I've been buying this year, at least so far. And by the way, this doesn't include my weekly dollar cost averages into SCHD and VOO. This is just my individual stock purchases over in the taxable account. At any rate, getting into it, one of the first stocks that I started buying in 2025 was none other than Realty Income. And just as a sidebar, so you know the order that we're going in, we're going to go in ascending order from the least contributions to most contributions. So out of all the stocks that I've picked up so far this year, Realty Income has gotten the least amount of contribution dollars, and in total so far, I've invested about $254 into this stock, and with that $254, I picked up 4.65 shares at an average cost of $54.67, which as it turns out was a pretty good price to buy those shares at, because as we can see, the current share price is a bit above that, currently sitting at $57.68, and so far, at least for the last month, Realty Income has been pretty flat. But if we zoom out looking at the year-to-date performance, that's a completely different story. So far in 2025, Realty Income has been crushing it. The stock is up almost 12%, which if we look at my position is going to have me in the green with Realty Income. Just looking at the share price, I'm up about 6.25%, so nothing too crazy there. And in total, I have almost 109 shares of the stock at an average cost of $53.56. So a pretty solid average cost per share. And since each share of Realty Income pays $3.23, with the 4.65 shares I've purchased this year, that's going to add $15 to my projected annual dividend income. So that was the first position that I added to in 2025. And by the way, guys, what we were just looking at a moment ago was from Snowball Analytics, which is actually the sponsor of today's video. This is hands down my favorite portfolio tracker. I think you guys would really like using this, and they're actually running a really killer sale right now, so I want to tell you a little bit more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Swiss Army knife of portfolio trackers. I've been using this platform pretty religiously to track my own portfolio for a while now, and I can't tell you how impressed I am with how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and the platform overall is pretty easy to navigate. Plus, it's packed with more charts and graphs than you can count, which speaks to just how much data you get, not only for your portfolio, but also at the individual stock level as well. I mean, pretty much anything you want to know about a company's financials or dividend history can be found here within the platform. Now, in my opinion, what really sets Snowball Analytics apart are the features it has specifically designed for dividend investors. I'm actually convinced this platform was made for us, and here are some of my favorite features. First off, Snowball tells you your total returns by default throughout the platform, which may sound like a small thing, but it's crucial for dividend investors because it doesn't neglect the dividend income we receive when calculating returns. Most other portfolio trackers will only show your share price returns, which is really only half the equation, so it's refreshing to see dividends factored into these calculations. Additionally, Snowball has a pretty in-depth event calendar that keeps you updated with upcoming news, dividend payments, and any other important stuff going on. And they even have a dedicated dividend calendar so you can see who's paying you each month, when they're paying, and how much they're paying. Beyond these tools, Snowball also has a community section where you can check out other users' public portfolios to see what others are investing in, which is always a fun thing to look at. Plus, they have stats for stocks and ETFs that show what's trending and what's popular among other investors. This makes Snowball not just a killer portfolio tracker, but also a great place for dividend investors to get new investing ideas. So overall, if you're looking for a great portfolio tracker, which once again is something that every investor needs, then I highly recommend you check out Snowball Analytics, which you can actually do for free. All you need to do is click the link in the description of the video or in the pinned comment, or just scan this QR code right here to get a free 14-day trial. And if you like it, you can save 30% on your subscription right now until July 23rd. So time is definitely of the essence. I really love using Snowball Analytics, and I know you will too, so definitely take advantage of the sale and save 30% on your subscription. Anyway, getting back to it, the second stock that I've been buying in 2025 has been Clear Secure, which, as a lot of you guys know, is one of the newer positions in my portfolio. I think I first started buying into the stock back in like October or November of 2024, and since then, for the few months after that, I'd been dollar cost averaging into this position pretty much every single week. But so far here in 2025, I've added about $600 to my Clear position, which bought me 24 shares. Not too shabby, and I bought those shares at an average cost of $24.83, which, like with Realty Income, in hindsight, that was a really good price to be dollar cost averaging in at, because right now, fortunately, the share price is quite a bit above that. It's making its way back up to $30 per share, and the last month for Clear has been really strong. The stock is up over 8%, and if we zoom out not looking at the year to date, that's going to leave the stock up 7.6% so far for the year. And as far as my purchases go, I was buying the stock probably somewhere in this range, like heading into 2025. I was probably buying it for the first couple of months, so January into February, which if we look at my position did wonders for my average cost per share. Prior to dollar cost averaging into it, my average cost per share with Clear was sitting above $30 actually. I think it was more like $31 or $32 per share. But by buying it much lower prices, I was able to bring my average cost down below $30, even below $29 per share, and I'm very happy with where it's at now. But all in all, I have 128 shares, and since the current share price is just a hair below my average cost, I'm down in the red just a little bit, nothing too crazy, only down 1.3%. And since each share pays 50 cents, which by the way does not include the special dividends that this company tends to pay out, this is just the regular dividend, but with each share paying 50 cents, considering I picked up 24 shares so far this year, that will have added $12 to my projected annual income. Anyway, moving on to the third stock that I've been buying in 2025, this one's Johnson & Johnson, one of my favorite dividend kings. And so far this year, I have added $616 to my position, so just about $20 more than what I contributed to Clear. And those contributions have added 4.1 shares to my J&J position, and I bought those shares at an average cost of $150.38, which is just below the current share price of $156. So really not too much movement from where I was buying those shares. We can see the share price has been very flat in the last month, but year to date, so far it's been pretty good, up almost 10%. But I was buying really more in this range, I would say probably at the start or even mid-April, heading into mid-April when it was in the low 150s or even dipped into the 140s. And as we can see, Johnson & Johnson is one of my larger positions out of both of my portfolios, my Roth IRA and my taxable account, which includes SCHD and VOO. J&J is overall my fifth largest position, so it is there in the top 5, and in total I have 40.8 shares at an average cost of $157.94. So I am seeing a little bit of a loss with this position. I'm down, looks like 1% here. But then as far as the dividends go, since each share of J&J pays $5.20, the 4.1 shares that I've added to my position this year have added $21.32 to my projected annual income. Now moving on from Johnson & Johnson, the fourth stock that I've been buying this year has been VICH Properties, my favorite REIT, I would say actually. I really love this company. And so far this year, I've invested about $780 to my position, which has bought me 26 shares even. And the average cost on these shares is really not too bad, just a penny below $30 per share. And as we can see right now, the current share price is $32.76. So we are seeing a gain on the shares that we've picked up this year. And in the last month, it looks like VICI's up 2.5%. Year to date, it's having a very good year. It's up 17%. And I honestly wish it was the opposite. I started this position when the share price was like $27, $28 per share. And I would have just kept buying and just kept buying as long as it would have stayed around that price range. But soon after I started building up this position, the share price really got away from me. And even this year, it really hasn't been below $30 per share, hardly. There was a brief period of time where it was, and I did buy some shares at that time. But otherwise, it's been pretty hard to get VICI at the price that I want. Still, nonetheless, I do have 145 shares, a pretty decent position, and my average cost is sweet, guys, $28.54, which is going to leave me up about 15.5%, just talking share price, including dividends, up 19.16%. Anyway, with each share paying $1.73, the 26 shares that I have bought this year will have added $44.98 to my projected annual income. That's a nice boost. So that was stock number 4. Now moving on to stock number 5 that I've been buying. This is EPD, Enterprise Products Partners. And so far this year, I've invested $834.60 into this position, which, like with VICI Properties, has allowed me to buy 26 shares. And I bought those shares at a bit of a higher price than I would have liked to be honest, $32.10. All of these shares were bought after selling out of Altria Group. Upon selling out of Altria, which was a recent thing, as a lot of you guys know, I ended up reinvesting the proceeds from that sale into 3 different companies. EPD was one of them, and actually the other 2 stocks we'll be talking about after this one were also reinvestments from Altria. And Enterprise Products Partners, for the most part, has been pretty flat this year. We can see that's certainly the case in the last month, down 0.5%. And year to date, there's really not been much movement here either, up 3.6%. But nonetheless, we're still sitting pretty, guys. I have 138 shares at an average cost that is still looking really good, $25.42. So that's going to leave me up 25.5% just talking share price, and a lot more including dividends, which is no surprise because EPD is a very high yielding stock. My yield on cost with this position actually is 8.6%. That's pretty juicy. And since each share pays $2.18, the 26 shares that I picked up this year have added $56.68 to my projected annual income. That is nice. But anyway, now moving on to stock number 6. This one is Blue Owl Capital Corporation, which, like I said, this was another stock that I mostly added to because of the Altria reinvestment, but there were some other instances throughout the year where I picked up some more shares just because the price at the time was too good to pass up, and I'll talk more about that in just a moment. But so far in 2025, I've invested almost $900 into Blue Owl, which bought me 65 shares. That's very solid, and my average cost on all these shares is $13.77, which is a bit below the current share price, which is currently sitting at $14.50. And in the last month, Blue Owl's seen a pretty decent dip, down 2.3%. And year to date, it's also down in the red. It's down 0.4%. And like I said, there was a brief period where we saw a pretty nice pullback right here in April, and I was buying some shares a little bit during this time. And even with those 65 shares added to my position, Blue Owl still is one of the smallest positions in my portfolio, third from the bottom, but right now I have 181.4 shares at an average cost of $13.82, so we are still seeing a gain looking at the share price. And this is the highest yielding stock in my portfolio with a 10.3% yield. My yield on cost is 10.7%, so a little bit higher, but nonetheless, either way, a very, very high yield. And since each share pays $1.48 in dividends, which does not include special dividends, they pay them out every single quarter. But special dividends aside, the regular dividend is $1.48, and with the 65 shares that I've picked up so far this year, that will have added $96.20 to my projected annual income. Now moving on from Blue Owl Capital Corporation, this next stock, which is Chevron, has actually seen the second highest amount of contributions from me so far this year. So out of all the stocks that I bought in 2025, the second most amount of contributions have gone to Chevron. Hopefully that makes sense. Anyway, for the year, I've invested $1,736 into Chevron, and that has bought me 12 shares. And I picked up those shares at an average cost of $144.71, which fortunately is just a little bit below the current share price. So we're seeing a slight gain on those shares, and I bought them very recently. This is another one that came from the Altria reinvestment, and I think we timed this one pretty decent because in the last month, Chevron is cooking. It's up 6.5%, which is going to leave the stock up pretty much the same here in 2025. So all of its gains so far this year have come just in the last 30 days. And Chevron is a very middle of the road position for me. I think it's my 9th largest position overall in the portfolio, and right now I have 31.77 shares at an average cost that has been creeping up there. It used to be actually below $100 per share at one time, but I've been buying up on this company. I think Chevron's a very high quality company, and just sporadically adding to it over the years, that's brought my average cost up to where it's at now, $124.89, which is still below the current share price. So we're seeing a pretty decent gain right now. We're up 22.5%, and with every single share paying a whopping $6.84 in dividends, the 12 shares that I picked up this year have added $82.08 to my projected annual income. Now, so far, guys, we have covered 7 out of the 8 stocks that I've bought here in 2025. And as you know, we've been going in ascending order based on the amount of contributions. And this last one, which is the stock that I've contributed the most to, it wasn't even close. And it's probably not going to be much of a surprise, but this last stock is Zoetis, which is the newest position to my portfolio. And I've been dollar cost averaging into this stock every single week since I started the position, which I think was sometime back in April, so it's been a few months now. But in total, I've invested $5,600 and I've picked up 35.5 shares at an average cost of $154.36, which is not too far off from the current share price. Right now, it's sitting at $157.80, and there was a brief moment of time, we can see it's down quite a bit in the last month, but if we zoom out, there was a brief moment of time where it really started to get up there. It was touching at $170 per share, so for a minute there, we were sitting on some pretty solid gains, but still year to date, Zoetis is down 2.6%. And we already know the stats on my position. I just listed them out a moment ago, but 35.5 shares at an average cost of $154.36. So right now we're up about 2.5%. And with each share paying $2 even, that will have added $70.98 to my projected annual income. Now, putting all of this together, here are the totals so far for the year. In 2025, I've invested about $11,300, which breaks down to about $1,886, almost $1,900 per month, which is way above average for me. But anyway, across the board, that 11.3K added $399 to my projected annual income, which means that the total yield on my invested dollars this year comes out to 3.53%, which is pretty spot on, actually basically identical to my portfolio's overall yield here on Snowball Analytics, which once again, you guys should definitely check this out. I know you're going to love this platform. There's a link to it in the description and in the pinned comment. But anyway, that's what I've been buying so far this year. And with that, if you want to hear about a handful of stocks that I'm most definitely not buying, I'm definitely staying away from these and suggest you do the same, then check out this next video right over here. In this one, you'll learn about 3 dividend stocks that are showing some pretty big red flags that make me think they could be next to cut their dividends. So click right over here to check those out, and I'll see you in the next one.